This is the Tax Show with Peter Stephan from the Tax Resolution Institute. I'm Brian Whitman here every Sunday afternoon at this time. Peter, question for you. I was talking to somebody recently, and they were dealing with an unresolved tax issue. One of the, I think it's a great question. People move. I mean, people move from state to state. People lose paperwork. People don't have documents. And then you're looking at 4 years, 5 years of unfiled returns. And people say, I don't even know where to begin in terms of the paperwork. I don't have it. I don't have the receipts. I don't have the statements. At the Tax Resolution Institute, is that a challenge that you deal with often, and can it be dealt with?
We deal with that challenge on a daily basis, Brian, because the first thing that we do after we obtain a power of attorney from the new client, from the taxpayer, and a power of attorney, by the way, is what enables us to speak with the IRS or the state taxing agencies. Without that, they won't talk with us. It's limited to tax matters. And so what we do is we get what we call the tax transcripts, what returns were filed and when they were filed, and certain other items. Was there a bankruptcy filed? Was there in the past? Was there an installment agreement? Was there an appeal? And a number of other things which become very, very important, especially if we are considering bankruptcy. But in addition, we get what we call the wage and income transcripts. Well, bingo. We have all the information that has been reported to the IRS by third parties, W-2s, 1099s, mortgage interest, and the like. So there's no need to procrastinate. There's no need to panic if you don't have these documents, because we're talking about 2, 3, 4, 5, and maybe 10 years ago.
It's not a burden for the taxpayer, because at the Tax Resolution Institute, you can access that information.
We're going to access and get that information anyway, especially if you have unfiled returns, because the last thing we want to do is prepare a return that doesn't include everything that the IRS has on their transcripts.
We do the Tax Show here every Sunday afternoon at this time. That's Peter Stephan from the Tax Resolution Institute. Of course, Jim Felton is here from Greenberg and Bass. And I like to point out that when we're doing this program, a lot of people drive around the car on a Sunday afternoon and they hear this conversation and they begin to think, wow, are these guys talking about me? Am I eligible for this? And it's a question for both of you. We'll start with Jim and then we'll go to Peter on the issue of bankruptcy, because at Greenberg and Bass, that's what you're dealing with, Jim. To whom is bankruptcy to whom is that option available? Not everybody. I understand that much. Is it difficult to determine exactly who's ready for bankruptcy or who's at that point?
There's 3 different kinds of bankruptcies very broadly. One is a Chapter 7, which is essentially a liquidation. It's I can't pay my debts as they come due, and I don't make enough money where the court and the statutes are requiring me to file for a payment plan. The second kind of bankruptcy is a Chapter 13. That's where you earn too much money or have too many assets to file Chapter 7, so you come up with a plan over 3 or 5 years to pay some portion of your debts back. The third is Chapter 11. Chapter 11 is available for individuals or businesses. It's primarily used for businesses, and that's the one that people talk about where the airlines file Chapter 11. It's a reorganization. It's significantly more expensive than Chapter 7 and Chapter 13. So it's usually utilized by larger businesses who know that there's a way out. They need time. They need to restructure some things, but it's a business that's worth saving. So it's worth the time and effort to spend a couple of years probably in a Chapter 11 bankruptcy getting back on the corporate feet, so to speak.
Peter Stephan from the Tax Resolution Institute. Again, go to the website, taxresolutioninstitute.com, taxresolutioninstitute.com, or call them if you've got an unresolved tax issue, 800-658-7590, 800-658-7590. Last week we talked about offers in compromise. Perhaps you qualify for an offer in compromise. We talked about a $5 million bill being settled for $5,000. But back to the issue of eligibility, Peter Stephan. Who's eligible for tax relief and who isn't eligible?
Well, anybody that owes income or payroll taxes, but we'll talk income taxes here first, is eligible for some kind of relief. That is, either through an offer in compromise, which seems to be what gets most people's attention. Everybody wants to settle for these pennies on the dollar. They watch a lot of middle-of-the-night TV and get those ideas. And, in fact, if you qualify, that's the perfect way out.
And in many cases, it does happen.
That's correct, Brian. And, in fact, as we said last week, the IRS loosened up their offer and compromise rules last March to where many, many more people qualify under these new rules. We also have installment agreements. That is, let's pay out the liability over a period of time. We might have a partial pay installment agreement, meaning that we're going to make a small payment every month, and we're going to let the statute for collections run out. That's what I call a backdoor offer and compromise. Sometimes it's even better than an offer because you actually could pay a lot less doing a partial pay installment agreement. And then, of course, we have bankruptcy. Now, back to the bankruptcy question. Income taxes, in fact, are dischargeable in bankruptcy under what we call the 3-year rule, the 2-year rule, or the 240-day rule. Very generically, the 3-year rule says 3 years from the due date of the return, including extensions, income taxes are dischargeable in bankruptcy. 2 years deals with delinquent returns, and 240 days deals mostly with audited returns. The point I'm trying to make here, though, is that many bankruptcy attorneys, which is why Greenberg and Bass and the Tax Resolution Institute work closely together, because we understand this, but many bankruptcy attorneys do not take these taxes into enough consideration in the decision to file a bankruptcy. In fact, I see much too often when cases are referred to me where bankruptcies have already been filed. By way of example, I had an attorney file a bankruptcy 6 weeks too early. And after the discharge, $250,000 in federal taxes were discharged, and we got a bill from the state for $50,000. There was no reason at all that the attorney could not wait 6 more weeks. He just didn't do his homework. That's what they call malpractice.